Central banks are modern-day alchemists. They're able to create something out of nothing. And through the process of artificially setting rates, by pumping money and pushing it into the different sectors, they have created bubbles everywhere. And they create quote-unquote money. The US dollar, the euro, the Canadian dollar, this currency is being created out of nowhere, and they have become modern-day alchemists. And through this process, there's going to be a price to pay. So again, central banks they have destroyed the free market system. They have destroyed price discovery in the system. No one knows what the true price of anything is anymore because the markets have been totally destroyed. This has led to incredible capital imbalances, money flowing into different bubbles, the real estate bubble, the stock market bubble, the debt bubbles everywhere. And in return, what has happened is investors are no longer investors, we are speculators. At 0% interest rates, you put your money into the bank. Well, you lend your money to the bank because they don't keep your money. They go leverage that in the system, and what happens next? People don't want to put money in there, so they put it in the stock market, they put it in the real estate, and things just keep blowing up and more. And you can't be an investor today, and that's a big problem because how do you protect yourself when this all comes to an end? This is a slide from last year, and this showed the global central bank expansion of money, quantitative easing, which entered into a quantitative tightening, cumulatively speaking, with all the central banks last year. It went into a negative territory. So we were talking about how does the US government pay interest on 23 trillion or whatever, it keeps growing every year by $1 trillion or more dollars. How does, say, the US pay a 5-6% interest rate? They can't. That's $1 to $2 trillion in interest payments a year on top of new debt. So as we expected last year, central banks have had to stop quantitative tightening and had to print money and push the liquidity into the system. It's a Ponzi scheme. The second they try to take liquidity out of the system, the thing collapses. So it's very evident that this system, the whole thing is based on pumping money into the system. You look at all sorts of metrics, everything's at records and extremes. The global net worth globally went up by $50 trillion last year to $360 trillion. So sure, the debt is rising, but global wealth is rising even faster. But that's all fake wealth. That's, stock market, real estate, debt markets. That's all going to readjust at some point. It's all extreme levels. Today, we're in a bubble. Everything's in a bubble except for maybe commodities, agriculture, and a few items like precious metals. But that's going to change as well. But everything else is in a bubble. The price distortion, the capital imbalances are at historic levels, and there's going to be a massive reset. And when that time comes, it's going to be realized through the collapse in currencies. There's going to be a massive reset in all sorts of currencies. Sure, the dollar is very strong right now, and it will do better than other currencies until a certain point. And then at one point, it's either going to happen on its own, it's going to happen very quickly, there will be a collapse in the value of the US dollar, or they'll have some sort of devaluation of the dollar like they did in the 30s, where they took the gold price and they set it from, went up from the 20 to 30 some dollars an ounce range. So there's some different ways that they'll look at managing the massive amount of debt, which is going to happen by devaluing the currency underlying it. So we've gone through the biggest credit bubble in the history of the world. It continues to grow. In the last 10, 15 years since the last financial crisis, nothing has changed. We continue to add more debt. We've cut interest rates to 0%. We have negative rates. We had over $15 trillion in negative yielding rates in the summertime, and it's about 13 trillion right now. The U.S. Treasury bonds paying 1.5 or ran up to about 2% now. You look at inflation, your real rates are negative. Things are really out of whack. And now that we've had a 10-year plus cycle here of incredible growth. This is the longest expansion period in the history of the United States, and now we're going into the next cycle. What are they going to do next? And it's just not the United States. It's Europe. It's China. It's all over the world. The global debt situation is all connected. And in the end, when you have a currency collapse, where do you hide? Well, one of the places is going to be gold. Gold is money. Everything else is credit, as J.P. Morgan said. And that'll be realized soon. At the moment, the dollar is the gold standard in the world. It's actually been falling. There's been a de-dollarization globally. About 60% of global central banks hold dollars. It's coming down from about 2/3. And then they've been increasing some euros and yen and so on. That's just it's just another fiat currency that they're positioning and stuff. But in the end, they're going to have to come back to gold. So again, debts are too great. They can't pay it back. It keeps growing, so they're going to have to inflate that debt away through debasement of the currency. They're going to have to cheapen the debt. So if you're holding US dollars or you're going to holding euro, one day you may wake up and you may see 20, 30, 40, 50% loss in your purchasing power in those currencies. And that's going to happen, and when it happens, it's going to happen very quickly. So now is the time to take action. And it's just not about your finances. There's a lot more involved with capital controls and so on, and I don't have a lot of time to get into those things, but now is a time to take protective action. Even though everything seems so great, record stock prices, real estate's doing well, GDP growth, blah, blah, yeah, it's all great until it falls apart, and we're so away from the equilibrium that when it does come apart, it's gonna be like an earthquake. There's gonna be huge shifts. And at that point, you're either positioned, you're protected, or else you're going to pay a dear price.